Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, December 18th, 2025, and here is everything you need to know as the markets open for today. Let's kick things off with Wall Street overnight. It was a rough session on Wednesday, with significant selling pressure across the board. The S&P 500 fell 1.2%, dropping almost 79 points to close at 6,721. The Dow Jones shed 0.47%, losing 228 points to finish at 47,886. And the Nasdaq took a harder hit, sliding 1.8%, losing over 418 points to end at 22,693. This marked the fourth consecutive day of losses for the major averages. The culprit was a renewed sell-off in artificial intelligence stocks, with Nvidia leading the charge downward as concerns about massive data center spending intensified. Oracle had a particularly brutal day after reports emerged about a major investor withdrawing from a $10 billion Michigan data center project. Broadcom also declined sharply as investors worried about margin pressure on custom AI chips. Meanwhile, oil stocks got a lift from rising crude prices following President Trump's intensified actions against Venezuela, including a blockade on sanctioned oil tankers. Looking at energy, Brent crude bounced higher, surging over 1% to nearly $60 a barrel, as geopolitical tensions drove some safe haven demand for commodity hedges. Now let's look at the Indian ADRs that moved overnight. HDFC Bank and ICICI Bank ADR are down by 0.2%. Infosys ADR surprisingly is trading more than 2% up. This suggests some strength building for IT, though Nasdaq hasn't been strong recently. Turning to Asian markets, the picture was more constructive. Japan's Nikkei 225 is down 1.2%. Hong Kong's Hang Seng is also down 1%. The only one positive is mainland China's Shanghai Composite, which is up 1%. These gains suggest that Asian investors are looking past Wall Street's weakness and focusing on domestic growth stories. Now for GIFT Nifty, our indicator for today's open, it's trading at 25,850, down just 30 points. This suggests a very mildly negative open for Indian equities, indicating the market is taking a balanced view ahead of the opening bell. GIFT Nifty's consolidation pattern suggests traders are cautious but not panicked about the day ahead. On the global headlines front, there's important geopolitical movement affecting commodities. President Trump's blockade on Venezuelan oil tankers under sanctions has tightened energy markets and pushed crude prices higher, which is providing some relief for oil-dependent economies including India. The ongoing uncertainty around the India-US trade deal continues to simmer in the background, with India having submitted what officials are calling their final trade offer to the US, aimed at removing the punitive 50% tariffs on select goods. These trade negotiations remain fluid, and any breakthrough could shift sentiment sharply. Meanwhile, the rupee has come under pressure this year, falling nearly 5%, which is driving continued foreign investor caution. From a technical standpoint, the Nifty 50 is currently positioned between key moving averages, with immediate support visible at 25,700 to 25,550. Above that level, resistance is forming at 25,950 to 26,000. If the index breaks below the support zone decisively, expect momentum toward 25,400 to 25,300. Watch the RSI indicator around the 42 level for bearish signals. For Bank Nifty, support is holding at 58,700, with resistance near 59,700. The index remains in a consolidation phase, suggesting a range-bound day rather than a directional breakout, so traders should be patient and wait for clear signals at key levels. On the commodities side, we're seeing some interesting moves that matter for equities. Brent crude is trading near $60 per barrel, up significantly on the Venezuela sanction story, which is positive for energy stocks, but could pressure consumer discretionary sectors if the rally persists. Gold continues to climb, now trading around 4,345 per troy ounce, having gained nearly 1% overnight, reflecting safe haven demand amid global economic uncertainties. Silver is also firming, trading near $65.84 per ounce, up 0.68%. These metal moves suggest investors globally are building hedges against uncertainty, which typically coincides with equity market caution. For today's trading setup, here's the actionable perspective. We're in a consolidation phase where direction matters less than execution. Given the weakness in global tech and ongoing FPI uncertainty, traders should be selective and focus on defensive themes like quality financials, domestic consumption plays, and companies with strong earnings visibility. The RBI's pro-growth stance and strong DII support provide a structural floor, so avoid chasing shorts aggressively. Instead, look for dips in quality names to build positions cautiously. Banking stocks remain attractive on valuations following recent corrections. Stay tuned for the evening wrap, and send in your questions and subscribe to this podcast to hear US every day.